and focus on Bikaji is in focus because the company has announced its Q2 numbers with a category performance which is mixed. We are now joined by Manoj Sharma, who's the CEO, and Rishab Jain, CFO at Bikaji Foods International. Thank you so much, gentlemen, for joining us right here on NDTV Profit. Now, starting with Rishab. Rishab, the EBITDA margins expanded to 13.7%. How sustainable are these margins?
EBITDA profile in last 5 quarters, this is the highest ever in second quarter of this year. And our gross margin is at 35%, and our EBITDA is close to 15.4% with PLI, of course. But yeah, overall, from both lens, we have done multiple things like investing in people, investing in right set of process, be it long-term purchase, hedging of few products, which has given good result this year. So overall, what we see that this gross margin EBITDA profile is important for us overall, and next 2 quarters also we see the same momentum coming in at gross margin level. And this quarter, in second quarter, sweets offtake has been very good, and sweets is good on EBITDA and margin profile. And this helped us in maintaining good margin.
Right. When we look at the volume growth, that is hit a 4-quarter high at 10.8% as well. Now, how sustainable is this momentum, especially given the post the GST related destocking impact for the company?
So, post GST impact, so what happened is this adversely impacted quarter three because there was resistance from the trade in terms of buying, because it was written on the wall that the prices are going to come down. So be it a small retailer or a large retailer, distributor or a super distributor. So that's where was the hit now, which should positively impact quarter three and going forward on the back of consumption, so which is a relief in the price to the consumer. So that's how we look at it. The volume growth, if we look at, yes, we are pretty confident that we should be on a double-digit volume growth going forward.
Right, but Manoj, post the GST rate cut, what has been the consumer response been like? And has it had its impact on the consumer demand? Has it picked up?
So too early to comment, because in Q2, if you talk about, the impact was hardly, because the new pricing only started coming in 24th onwards, so just a week in the quarter. But yes, 1.5 months for this quarter almost has passed by. We see quite a positive impact because modern trade is one of the outlets where the benefit reaches to the consumer the faster. So all these price reductions, irrespective of the old MRP stocks, was also there in the stores. I mean, they downstocked it, and there is a better offtake which has been witnessed in the trade now. So should give a positive impact.
All right, should have a positive impact, yet to see the entire picture. But packaged sweets have emerged as a strong growth driver and an important category for you. How do you really plan to scale this particular category without compromising on your margins?
So this category has a huge seasonality play. So if you look at it, say, for these 3-4 months, wherein from Rakhi to Diwali, we do about 80% of our business on sweets, right? So you cannot make it about this, cannot be an ongoing stuff. Howsoever, if we compare year on year kind of stuff, we would want to now build on this category, because this category has huge opportunity, a huge unorganized play, and also good on our EBITDA margin. So that's what would be a consistent endeavor to build this category on. This quarter, we reported much better number, is also outcome of that last year. It was a little delayed Diwali, so that numbers came into quarter three, which got shifted, got preponed to quarter two. So that also is a reflection in these numbers.
That's right, Manoj. Of course, the Diwali and festivities had a huge role to play in that category. But the Western snacks, that saw a decline of 5%. Is this category also seeing a slowdown because of intense competition? Are you feeling that pressure? Rishab?
So in Western snacks, largely we have seen that this also in 2 halves. So July, August, we are doing fairly well. But in September, due to GST change, we've seen destocking of Western snack category, and also we've seen that this category has not grown this year overall, as overall level also, versus ethnic snacks category has grown this year.
Right. So, Rishab, what is the current utilization level that you have across the key manufacturing plants? And where do you see that headroom for growth that you have for the growth momentum to pick?
So we completed our capex cycle in FY24, and in last 1 year, we started using capacity what we built across all part of India. For this, we also got benefited from Government of India with PLI incentive scheme where government has granted 261 crore rupees of PLI. That's coming in our books of accounts. Overall, currently we are in quarter 2, we are close to 52% utilization. We started at 41, 42% in last 2, 3 years, and we are 51, 52%. And what we see that in next 2, 3 years, company doesn't require any major capex. We will this capex will suffice all the growth. What we will do in next 2, 3 years. Of course, there will be regular capex we will do for this NPD and maintenance capex.
Right. So, Rishabh, my final question, looking at the run rate for the performance for this particular financial year, you ended FY25 with top line of 2,600 crores. Now you've done 1,264 crores in the first half of FY26. What's the target for FY26 end now?
So this year we given guidance, and for us also that our company we should grow at around 15% year on year. That's what we are taking on. And in first half we are seeing we are growing 15%, and we are on track to achieve the same.
All right, Rishab and Manoj, thanks so much for joining us right here with all the details on your performance and the future outlook. Thank you so much.